Winnipeg has always been a city built on resilience. People here know what it's like to face hard winters, tough economies, and the ups and downs that come with living in the heart of the prairies. But there was one moment in recent history when that resilience was tested in a way that shook the entire city. It wasn't a flood, it wasn't a storm, it was a financial collapse. A collapse that hit everyday people right in their wallets. This is the story of the Crocus Investment Fund, the Winnipeg business empire that seemed unstoppable until the day it fell apart almost overnight. The Crocus Fund was born in 1992 with an ambitious vision. It was created as a labor-sponsored venture capital fund, meaning it wasn't just about making money, it was supposed to build Manitoba's future. The idea was simple. Everyday Manitobans could invest their retirement savings into the fund, and that money would be used to support local businesses, create jobs, and strengthen the provincial economy. In return, investors got generous tax credits. On paper, it sounded like a win-win. You could save for your future while also investing directly in your community. At first, the Crocus Fund was a huge success. Thousands of Manitobans bought in, attracted by the tax incentives and the promise of supporting homegrown business. The fund raised hundreds of millions of dollars and invested in dozens of Manitoba companies. For more than a decade, it was celebrated as a made-in-Manitoba success story, proof that a small prairie province could come together to build something big. Politicians praised it, business leaders supported it, and investors felt proud to be part of it. By the early 2000s, Crocus had become one of the most recognized financial institutions in Winnipeg, almost like a household name. But behind the scenes, trouble was brewing. The fund had a problem that almost no one outside its boardroom really understood. Many of its investments were tied up in small, private companies that couldn't easily be sold or cashed out. That meant when investors wanted their money back, Crocus sometimes struggled to pay. Instead of being honest about those problems, the fund's leadership found ways to paper over the cracks. Reports were massaged, numbers were presented in the best possible light, and for years, the appearance of success hid the growing instability underneath. By 2004, the cracks could no longer be hidden. Whispers began to spread that Crocus was overvalued, that the empire wasn't worth nearly as much as it claimed. Investors started asking questions, and regulators began to take a closer look. Then, almost overnight, it all came crashing down. Trading of Crocus shares was frozen. The fund admitted that it had serious financial problems. The value of people's investments plummeted, and just like that, hundreds of millions of dollars in retirement savings evaporated into thin air. The shock was immediate. More than 30,000 Manitobans had invested in Crocus, many of them ordinary workers who had trusted the fund with their nest eggs. For some, this was money they had planned to retire on. For others, it was savings they couldn't afford to lose. The anger was intense, and the sense of betrayal even stronger. How could something so celebrated collapse so suddenly? How could so many people have been misled? As investigations unfolded, the story only got uglier. The Manitoba Securities Commission accused Crocus executives of mismanagement, misleading investors, and failing to disclose the true financial state of the fund. A class action lawsuit was launched on behalf of investors, and years of legal battles followed. In the end, some compensation was eventually paid out, but it was only a fraction of what people had lost. The empire had crumbled, and no amount of courtroom settlements could bring it back. The Crocus collapse also had a chilling effect on Winnipeg's business community. Trust in local investment schemes was shattered. Politicians who had once praised the fund scrambled to distance themselves from it, and for years the scandal hung over the city like a dark cloud, a reminder of how quickly confidence can disappear. For investors, it wasn't just about the money, it was about the realization that something they had believed in, something that had been sold as a source of pride for Manitoba, had been built on shaky foundations. What makes this story so haunting is the speed of it all. For over a decade, Crocus had looked unstoppable. Then, almost overnight, it was gone. One day, it was an empire worth hundreds of millions, and the next, it was a collapsed shell that left ordinary people scrambling to pick up the pieces. That suddenness made it feel even more shocking. Empires usually fall slowly, with warning signs that people can see coming. But the Crocus Fund collapsed so quickly that investors barely had time to react. Even today, the Crocus scandal is remembered as one of the biggest financial disasters in Manitoba history. It showed just how fragile trust can be and how dangerous it is when transparency is sacrificed for appearances. It also served as a warning for other cities and provinces across Canada. If it can happen in Winnipeg, it can happen anywhere. So what really happened to the Winnipeg business empire that collapsed overnight? At its core, it was a story about ambition colliding with reality. The Crocus Fund started with good intentions, but it became trapped by its own success. Instead of being honest about its limits, it tried to keep the empire growing, even when the foundation wasn't strong enough to hold. And when the truth finally came out, the collapse was swift, brutal, and unforgettable. For Winnipeg, the lesson is simple but sobering. Big dreams require accountability. Without it, even the most promising empires can fall apart in an instant. And when they do, it's always the ordinary people, the workers, the savers, the families who pay the highest price.